Hey everyone, it's Minasuma here. Today is 13th of April 2025, and this is a weekly market recap. We're going to check the health of the market, indexes, crypto, and stocks. This week we had big winners, especially around technology, with a 9% increase. Basic materials leading behind with a 6.66%, industrial sector with a 5.8%. On the loser section, we've got this week the energy with a minus 0.61 and real estate minus 0.96%. Majority of the sector has been trending up and it has been very positive week for the stock market. On the sentiment level, we've got a huge rebound from previous levels at 4 past week to a level of 13. Still, we are under extreme fear levels, but has been slightly alleviated by the bounce of this current week. Looking directly into the charts, we can observe the volatility of the SP 500 compared with the VIX. Last time we have a major drop was back in August 2024, and now we are seeing this same event in April 2025. If we zoom in, we can observe that we reach a maximum in the 60.13 on the VIX, and then the peak, the prices tend to bounce back. So we are looking here at an actual inverse chart. When the volatility levels are low, the market tend to trend upwards slowly and steadily. When the volatility inverse, so the higher numbers of volatility we see, the lower returns we expect for the SP 500. It's very important what we have seen this week, and we will be looking into that more carefully later. A very interesting point where we are at the moment is with the indexes. So last time the index exit the long position on the Nasdaq was in November past year, the SP 500 this year in February, and the Dow Jones in November as well of the past year. All the systems are configured to take long positions and short positions. They successfully exited the short position as well, which I have not displayed within this chart. And now we can be in a very interesting point where the long-term signal can be triggered potentially this week. I don't know what's going to happen, but I have set my whole systems in a way that tells me when to buy, when to exit, what to do in certain condition, and what to do in X condition. I would like to mention that I do not follow any comments, any advices, any recommendations from anyone within the internet. I have developed across the years strong systems that tells me when to buy and when to exit, and based on that I adjust my trading position, and I adjust based on that my potential upside reward, and also mitigating my risk at all times. Last time we got the long-term entry, we had to date back to March 2023, February 2023, and November 2022. So it's quite interesting because we haven't seen that signal in almost 2 years. And probably this week we'll be able to get an answer on it. Checking the indexes relative performance, we can see that the Euro stock, which was clearly leading the beginning of the year, has entered the negative terrain. The Dow Jones is currently trading negatively, minus 5.54%. The SP 500 minus 9.22%, and the Nasdaq minus 11.74%. So all the indexes, including the Euro stock, are trading negatively this year. However, still Europe has been a better indicator or a better index to keep your money within the first part of the year. That being said, over the long term, it's very important to consider that the further we go on this chart, let's gonna take, for example, 2020, we can observe how the Nasdaq has been performing among the rest of the indexes, like the SP 500, the Dow Jones, and then Europe. So it's very important within the context you currently are trading or the context you are currently investing. And we could be potentially heading towards a period where now naturally America start doing best or better than Europe. If it's going to happen, we certainly don't know. We just simply need to speak objectives and speak facts. And so far, Europe has been leading the beginning of the year. Looking directly at the charts, we have activated on the Dow Jones Industrial Average a double top that was activated, also a two-wave impulse by a Fibonacci retracement. So we have the first wave and then the second Fibonacci retracement, which was as well achieved, and now we currently are assisting into an actual bounce. Again, as previously mentioned, the 200 moving average could act as a potential resistance. We can clearly see if we zoom in. And I currently see this market correction more as an actual normal healthy correction more than anything else. The reasoning is because we have been going trending upward since October 2022, and the market went to look the 50% Fibonacci retracement level, which passes around the 36,961, around that area. It's very important that we don't lose the 61.8, otherwise things can start looking very ugly. We could ask ourselves, has the correction yet finished? Well, we still don't know, and the reason because is if we retrace an actual and we use another Fibonacci level from maximum to the minimum, in order to have more probabilities to go back to all-time highs, we'll need to break through the 61.8%, which passes on the 41,767 area. Now, this kind of chart outlook is very similar to the SP 500 and the Nasdaq, which we can see now. When we look into the SP 500 directly, we have another two-wave of Fibonacci retracement. We have the first one, and then we have the second one as well achieved. We currently are bouncing back, and we need to see that the real clear objective to go beyond is the 200 moving average that passes through the 5,810, and it's very important to not lose the $4,835 area in the SP 500. Otherwise, we could see another impulse on the Fibonacci retracement, and we will have a third one. It hasn't been activated, but we need to be careful if that happens. If we zoom out, we can connect this as a whole beautiful movement, as an actual long-term upside movement with a natural correction, and the actual correction when to look for the 50% retracement area. As previously said, it's very, very important to not lose the 61.8% that passes through the 4,500. Otherwise, we could go back to the previous levels, which were the 3,483 by matter of probabilities. What's going to happen, what we need to take, what position we need to do at the moment? Well, I wouldn't say this is the right question. Instead, we need to see what the market is currently doing. So we have activated two bearish objectives. Now we have our first resistant important one on 200 moving average that was previously acting as a support level. And we need to break through the 61.8% that passes through the 5,687 area. If we do that, by a matter of probabilities, we'll go to the previous maximum, which passes around the 6,149. Right, and we are on a technical bounce. Then Nasdaq, very similar. First wave of Fibonacci retracement, second one, and we need to go beyond the 200 moving average in order to deactivate this bearish structure. Otherwise, we could face a third Fibonacci retracement wave. As previous as the last two, Nasdaq tend to be a bit more volatile than the other two. This is not the drawing tool I wanted to select, instead the Fibonacci one. And if we connect the minimum and the maximum, we can see that the prices went to see the 50%. By very little, hasn't been touched, has it, actually? No, it did not touch the 50%, but it was very close. So same analysis as previous one. It's very important to not lose the previous minimum, which was dated on the day of 4th or 7th of April. Otherwise, we could face another leg. It's very important as well that volatility levels tend to remain at lower levels, and the current market situation is going to produce huge upside movement and huge downside movement at the current situation. For those who are not comfortable with the volatility, is the price you're going to pay to enter the markets, but always you think first on risk and then you think on returns. Then now moving into crypto, we've got the Bitcoin. So Bitcoin is a very interesting structure. It still has activated the bearish structure around the 70,000 area. We have a previous minimum on the 74,436 with a clear objective of the moment. The resistance passes around the 90,000 area, and we can even call it this like a downtrend channel that is currently being forming. So no real objectives activated at the moment. The only one we have activated is the bearish one. Ethereum is showing lower or weaker strength when comparing with Bitcoin. The reason is because it wasn't able to, on the 2024 bull run, it wasn't able to overcome the previous maximums that were achieved in 2021. And we currently are following like a downtrend channel with a previous minimum of $1,386. Nothing here, nothing clear on the structures. It's very bearish at the moment, and until we don't see a price action reversing the structure, we certainly cannot say that the correction has finished yet. Last thing, moving into stocks, we've got quite interesting shapes. So we have a nice correction since 2022 to the maximum. Apple corrected to the 61.8% area and level, and since then we see a massive movement up. In theory, if we are Buddhist, we actually lose the 61.8% area by the close in the day 8. So I will still remain cautious. However, on the long term, Apple has demonstrated to overcome every situation, and if we see the long-term trend that Apple has had since inception, we can see clearly a beautiful upside with enormous corrections in between. So Apple wouldn't be a stock I will short, just simply because the trend and the momentum it has is very strong. However, in the short term, it's currently bouncing back, and we need to definitely make sure that the price breaks through the 61.8% on the movement upside. Best or the biggest rejection area is going to be the 229. Amazon touching the long-term support that we can just simply draw a line connecting the 2023 all the way to 2025, and we currently are on this area. Very nice one. Slowly went through for a couple of days, but now back into that trend line. Google, we have another big correction. If we connect the maximums to the minimums, Fibonacci level connected from the 2022 area. The price went to search for the 50% Fibonacci retracement, and now since here is trying to find a national bottom and being able to restructure. Has it been restructured yet? Not yet. Meta, probably the strongest one among all the 7 magnificent companies. We have currently this one only has been going to look for the 38.2%, and I don't discard in the future that Meta is going to go to lower levels. If it's going to end up happening, we don't know yet, but at the moment, I don't see any clear structure that tells me that the stock ended up from the bullish correction to or from a bearish correction to a bullish correction. Microsoft still has activated the bearish objective, who has not been achieved, and now the price is bounced back to previous support area that is here, and you can see that the prices are currently trading at an actual support area. So we'll need to see in the upcoming week if this area becomes as an actual resistance now, and the price is able to penetrate through it. Lastly, Nvidia. So Nvidia have a beautiful correction of double top, executed it successfully, and then the price bounced back exactly as Google the 200 moving average will be the first obstacle we have around the 126 area. Lastly, Tesla. So Tesla could be forming a very interesting pattern, which is a actual upside channel if we connect the 2020, 2023, 2024. What's doing in the short term, we have a very little triangle here that achieved the objective, it achieved, and now is basically trending slightly downwards. It's very important, the area around 182 and 190, because it will correspond to the area that previously acted as an actual support. Right, that's pretty much for this week of the market recap. If you have further stocks or companies you would like me to analyze, please drop into the comments. If you like the video, please mark with a like, subscribe. Hope to see you until next weekend. Bye bye.